Oh yeah, let's talk about the USO, United States Oil Fund. I've done some looks at their stock chart. This is we're going to look at some charts here that explain how the USO oil contracts work and what the USO actually does while the oil price is increasing. And it may surprise you, and it probably will surprise you. And this is Brian Lewis of MMT Investing, and the USO just changed. Okay, so here's a drama headline. Oil investors are doomed. Okay, Steven, let's see what you say. Okay, he's writing this because a bunch of people are in danger. Thank you, Saint Stephen. And here's the popularity of USO just going buck wild here recently. And he says it could get cut in half again, but let's take a look. Yes, the oil prices will rebound, but that's a problem. And right, ships are not sailing, planes are not flying, people aren't using oil. Okay, and that'll start recovering. Oil prices will start going up. The oversupply will eventually decrease. Everybody's projecting some oil price increases here, and everyone thinks that going big on the USO oil fund is gonna go up when the oil prices go up, and oil funds don't work that way. They just straight up don't work that way. Let's get into why that is. Okay, so they do track the oil price, but not in the way that you think. Okay, these are futures contracts. The USO is completely futures contracts for spot oil. And that means that you have the right to buy physical barrels of oil at the future price. And so you can trade these contracts, yeah. And the USO, instead of a person individually buying spot oil contracts, the USO buys all these spot contracts for everybody in the fund, but in the middle of the month, they sell all the contracts and then they go buy the contracts for the next month. So, for example, in the middle of March, it sells the April contract and buys the May contract. So you keep a month out contract and you keep rolling it over in the middle of the month. That's not a secret. That's how it's built. It says it plainly if you look up the ETF. Most people don't look up the ETF, so we're going to take a look. So here's some prices until December, and these are debatable, but at least the next several months it's looking to be going up. And with these price increases, for example, it's going to be going higher every single month. So every time you roll these contracts over, you're selling the current spot and you're buying more expensive contracts in the future. And blah 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 blah. And right, so the Contango situation. So what happens when you hit Contango is that means that your current spot is lower than the future price, and it doesn't happen that often, but when it is happening, it kills the futures contracts like the USO. So say that right, you're having to swap them and whatever, but when you get into this kind of long squeeze situation, he says, like, for example, the U.S. oil fund was selling for minus 38 at one point relative to the futures contracts, and people are trying to dump their spot oil contracts because they don't want to take barrels of oil. They can't actually collect the oil. They just wanted to trade the contracts, and now they're stuck with these contracts. They can't get rid of them. And so the USO doesn't like hang on and play around. Like when it hits the middle of the month and people are selling spot contracts at minus 38, the USO sells all of its contracts at minus 38 and buys new contracts at whatever the next price is, 22. And the USO takes a massive hit and you lose money. So that's how the futures contract in the Contango really affects the USO oil ETF. And then now there's a huge amount of people piling into the USO, expecting it to go up because the oil prices are going to go up. But here's the charts, okay, over the last, whatever, 20 years. You can see the oil prices, like from 2008 to 2014, went way up. And then from, 2015 to 2018, they went way up. You get huge increases in the oil prices, but check out what the USO did over those periods. It crashed when oil crashed, and then it went flatline the whole time it was going up. because every month you keep losing, rolling over to more expensive contracts, and you don't get the gains. It just sits there, and then when it crashes, you crash with it. And then when it goes up, you're rolling over into that increase, and you keep losing all the gains on the Contango rollover on these contracts. And so that is the oil prices versus the USO futures contract ETF, which either flatlines or goes down like always. And look at where it started. And this is that huge oil increase. I mean, oil went from 150 to 30 back up to 110. And the USO went from 900 to 200 to 300. And then in 15 when we crashed, and it went from 110 to 30 to 70. We went from 3 to 1 to 1. It doesn't go up when oil's going up, is basically the point of this. And that's because of futures contracts, and that's what Contango is. People keep saying the word Contango, and they maybe mention spot contracts, but I haven't seen anyone point out a graph like this. This is a really good article where you can actually see the oil prices versus the actual USO performance, and an explanation of how the contract actually sells to the next month, and how you can have a negative oil contract spot price relative to a future price, and you lose that spread every time. Even when the oil is going up, you're losing that spread. So that is the USO. And I don't know, he says something about a reverse split, and it's consolidating its shares. It had a 1.5 billion shares. Now it's less shares at a higher price. And there's no change or benefit in doing this. But it just doesn't want the shares to look like they're too low, or people delist the entire ETF. So they're kind of consolidating shares into a higher price to not get delisted. And yeah, and this is the reverse split, and it's looking like it could plunge again, and it might plunge, it might not, but the odds of it going up are pretty bad. And you can just look at the chart and see that's what it has done the whole time. It goes down aggressively when it goes down, and it just flatlines when it's going up. So that is the USO, and it looks like something to short when it's going to crash. And I mean, it's an interesting look. You could sell, you could try to sell calls on peaks in a flat area here as like a strategy on this kind of chart, where it's not going to actually go up, and just collect the insurance money basically from selling calls. And then if it goes down, that's fine. Or you can buy the puts if you can try to find a spot where it's going to crash. And those are the two kind of option strategies that you could use on this kind of chart. And I assume it's going to continue this. It looks pretty solid. And this is not investment advice. Please hit the like button to help me out with the YouTube algorithm. And that is Stephen McBride. Thank you, Stephen. This is a great article. And he's concerned about all these crazy amounts of people getting into the USO long right now, expecting it to go up with the oil price. And we have been looking at a few ways on this channel of getting into that oil price increase, and it's a little trickier than it looks, because the fracking and exploration companies are in huge debt trouble, and they're non-profitable, and the government's not bailing those out. It could nationalize that stuff later when it does go out of business. Or, I mean, what happens with all the oil equipment if they're not bailing these companies out and they're not profitable? And the low oil prices could continue for a very long time, and the contango could stretch out to the end of the year. And it's all really bad for oil in general. So we have to take a look at this cycle right now over the next month or so and try to track these oil stocks. And then, you could take a look at, there's a bunch of different investment ideas that do make sense during this oversupply and these low prices. The oil tankers are very cool. And they are going to respond to the cycle as well, so you have to get into them at the right time. So go check out my oil tanker videos. You can check out Nordic American Tankers, NAT, Euronav, EURN, Frontline is FORO, DHT, the double hull tankers, or TK, TNK. Those are all the crude tanker fleets that are storing a ton of this oil. And then there's some kind of trick plays with like Scorpio's STNG. That's a product fleet that's going to start storing crude, and that could see a jump. Or the what are the other ones? There's like SPX and TOPS, Top Ships. Those are crude fleets, and Zakos, the Greek one, has a mix of fleets, and Ardmore is a crude fleet. I've been looking at a ton of these oil tanker companies and how those are going to be really good companies during this contango and the low oil prices and the oversupply, and then the energy stocks, the oil energy stocks. I mean, you look at ExxonMobil or Chevron or BP or Shell, like those big oil companies. Like those aren't in risk of going out of business, and the government will definitely bail those out if they do get in trouble. They'll get loans to keep them going, but those ones you have to get in the right cycle timing. So I don't know. Those ones don't look good for another month, but they might be pretty good after that. And then the oil tankers you can get long on in the intermediate up and downs, sort of swing trading them in this cycle. And the USO, is not how you go long on rising oil prices. Sorry if that's what you're thinking of, but if you are predicting another oil crash or another contango, going short on the USO is a really good move. So that is what's happening, and yeah, the USO has been my best short in this entire cycle, and for sure, we're gonna see what else comes down here, because it looks like this next credit contraction wave that's coming down is gonna be hitting a lot of companies, and I don't know. I mean, oil and energy just bombed in this first part of the cycle, and now we'll see what happens in the next part. Could be tech and industrials that come down. Those usually don't do well in this type of cycle. Um, so yeah, that's the USO. Oil prices up, USO flat. Oil prices up, USO flat. Crash, 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 crash. So it's kind of crazy, and I don't know if we should expect another negative kind of contango crash like we just saw. Probably not, because that's kind of a bottom reversal point where people are just holding the contracts. Now they know it's going up, so it's not going to be quite the same situation, but that's how USO is looking. And yeah, I think that's a good look. A good look at the oil sector. If you guys have any questions about any other stocks, I mean, I took a look at like a midstream company. There's some like land-based kind of oil companies that are into oil storage. Um, I forget which midstream company I was looking at, but uh, yeah, but there are land oil storage companies that are going to be completely full for a long time. But usually the midstream companies are into processing the oil and logistics and piping, and they're reselling, and the low prices aren't really helping them that much, but you could probably find a low bottom where those are a good value play. And I'll be looking at some kind of midstream companies like that. And I don't think the any of the oil companies that are upstream, like the pumping or the fracking or any of those, are going to be in a good spot for a while. But downstream companies could be doing okay, like the refining companies, like Phillips 66. They're a refining company that stores oil, and they could stockpile I'm sure they're already completely full, but they can stockpile oil at cheap prices and refine it and then sell the refined oil at higher prices later. And that could be good over the medium term or something like that. So I think I've done a Phillips 66 video already, but the midstream and the downstream companies that store oil look like they might have a okay time coming up soon, but the upstream companies that are competing with this oil oversupply are not looking good. And so that's that's good. That's a lot on oil. Okay. Please hit the like button and happy trading.